Hey, welcome to the 40 Finance channel, everybody. And if you see on the screen, I made my first appearance on Yahoo Finance yesterday. Did a little 5-minute bit where I kicked around some stocks with their team. It was very fun. I was a little nervous, but it worked out pretty well. And one of the stocks that I talked about yesterday was CrowdStrike. So for today, I'm going to be comparing CrowdStrike and Cloudflare. These are two stocks that I've been very interested in, have watched for 5 or 6 months now, and I'm getting to the point where we're seeing some tech pullback in terms of pricing that maybe I'll be able to add one of these and feel a little bit better about it. Yesterday in the market, we had a decent little pullback. We also had the Facebook outage. And while I don't think the Facebook problem, I don't believe that was like a cyber attack, it certainly revitalizes, my interest in cybersecurity. For me, I'm going to pick one between CrowdStrike and Cloudflare. So that's what we're going to do on this video today. All right, we'll kick things off looking a little bit at Crowdstrike Momentum with this year-to-date chart here. Looks like beginning of the year, they were in the neighborhood of 225, trading today at 243, up a little bit from yesterday's meltdown. And the 243 puts you right in between the 50-day and the 200-day. So from a chart perspective, it's certainly a downturn. And when we saw this reach in between 50-day and 200-day previously back in August, and then again back here in May, CrowdStrike's always been able to recover. What we will see, though, from the valuation perspective, is it rides a very, very high valuation. So this is just a year-to-date chart. And the question remains for the stock market is how much of these valuation multiples will continue to be paid by investors, or at what point do they back it down a little bit and say, I'm looking for value, cyclical, stuff like that. That's the conflict for me when I look at some of these stocks, is I just don't believe that these valuation multiples will continue to be paid for. But we'll see how it goes. All right, real quick, year to date for Cloudflare started around $72 or so this year. And this 50-day has been moving up after it looks like a bottoming right around $70-ish. In May 11th, we had broader market weakness during that time. And we see the dip here for the last couple days that did bring you below the 50-day. As I kind of stare at this, though, I'm just wondering, did it dip enough? This is a pretty good separation between 50 and 200. Tough to say. In both cases, though, we have seen lower RSIs coming out. Looks like Cloudflare's at 50 today. I didn't show it on the last chart, but CrowdStrike was trending around 41 or 42, something like that. All right, carrying on to valuation. CrowdStrike does not have a very long history. See, it goes back to January of 2020. Your forward PE right now of 55, I'm going to assume that's a non-GAAP number. It is lower than it has been if you consider 769 that it had back in January of 2021. But by no means is this stock cheap. You got a PEG ratio of 11. Price to sales, 50 times on the price to sales, 65 on price to book. So nobody's sitting here and saying CrowdStrike is a value play by any stretch. So what we're paying for that we're going to see on this page is, of course, the growth. So let me bring this in just a little bit here. On an EPS front, last year, non-GAAP, I'm assuming, came in at 27 cents. This year, the projection is for 47 cents, and then next year, 79 cents. So even if you hit 79 cents in 2023 fiscal year, your PE ratio is still going to be 300-400, something like that. So keep that in mind with this one from an earnings perspective. Now, from a revenue perspective, that's what this game's all about. Right now with CrowdStrike, This year, 60% as the projection, going from 875 million. Join the billion-dollar club, if you will, at 1.41 billion, if that projection holds true, and then inching towards 2 billion in 2023. That would be plus 38%. It is not, however, the same as the plus 60% they grew at today, so we have to keep that in mind. All right, on the Cloudflare side, little bit more of a history. Granted, it only goes back to 2019, but you see we do not have a PE. We'll get into the projections in a minute, but that eliminates, our forward PE and our PEG ratio. Price to sales at 73 times. That's a pretty big number right there. And then price to book at 50 times. All right, let's stack things up here on Seeking Alpha. I added Palo Alto Networks, which is, they're not a legacy provider, but they have been in the game for longer, and their stock has been listed certainly for longer than these other two. But we got CrowdStrike, Cloudflare, and Palo Alto Networks. You see our market caps. It's very interesting to see CrowdStrike ahead of Palo Alto Networks, but some of that is because of the stock price running up the way that it has. Seeking Alpha uses quant formula to do some ratings. They've got neutral for the two we're comparing. Palo Alto gets a bullish trend. From the author's standpoint, which is basically folks like you and I writing for Seeking Alpha, you got bullish on Crowd, neutral on NET, and then bullish on Palo Alto. Wall Street, very bullish on Crowd, the other two coming in at bullish. Let's take a look at some of our projections from a valuation standpoint in Seeking Alpha, and this is based on analyst projections, but they help you to see how the valuation multiples roll out. So if we got into non-GAAP for fiscal year 1, which would be this fiscal year, you see you got CrowdStrike 500 on the PE, Cloudflare not really participating in that, Palo Alto at 64 times. So the difference between these three obviously falls to the more established company. Once you get out, let's say 2 more fiscal years, if you can even do that projection at a reasonable capacity. You got 176 for the non-GAAP PE. Cloudflare coming in at 1,000, still struggling to really put a multiple on their non-GAAP earnings. And then Palo Alto is going to drop to around 44 if the projections hold true. And then on forward price to sales, that's a trailing metric, but 46, 66, and 10 times for Palo Alto. Now we do have forward for EV over sales, 39 times for CrowdStrike, 55 times, and 9 times for Palo Alto. All right, scrolling down to income statement. This is for trailing 12 months. Revenue, over $1 billion for CrowdStrike, half of that for Cloudflare, and then Palo Alto comes in just over $4 billion. So revenue per share, $5 worth of revenue for every share of CrowdStrike. Cloudflare, $1.74. And what you'll see with Palo Alto, it's a much more expensive stock. That's what explains some of this. It's in the neighborhood of $475 here today. So of course you're going to get more revenue per share. And interesting down here, if you go diluted EPS per share, we know that these companies are on the negative side, but CrowdStrike versus Palo Alto on a diluted basis is actually doing better, which is not something I wouldn't have thought about. They're actually losing less net income, although Cloudflare is winning that race. Now, on the balance sheet side, we have cash on hand. CrowdStrike getting close to $2 billion, Cloudflare $1 billion, Palo Alto $3 billion. Total debt, all of these companies, I would say, are in a good spot, except right here, Palo Alto has more debt than cash. That's not necessarily the end of the world. Don't forget, they were running about $4 billion in revenue. And you can see the difference on debt to equity. Palo Alto 500x on that. Cloudflare leading the pack at 55%. All right, so how long are you going to have to hold some of these companies at their current prices before they reach sort of a fair valuation, if you will? Well, if you bought CrowdStrike at 242 and the analyst projections for the next 3 years proved correct, I would argue they'll probably go up over those times, but let's just take it for what it's worth. If you woke up January of 2024, when that earnings report comes out, you have the EPS of $1.35. Your forward PE at that time would be 176.96. However, with all these companies, I'm telling you, the catch is that investors think that these numbers are being grossly misrepresented, okay? So they're saying that even this year, the 47 cents could be higher than expected. So that's where you have to kind of dig in and make your own bet on where you think things land. I guess for CrowdStrike too, revenue is going to play a much bigger role in its valuation, certainly over the next couple years. So let's see how our revenue projections are going. This year, we saw that land about 60%. Next year, 38%. You got 30s, which is good. It's hard to project too far out of the future, but if this went up over the course of the year and you got to 40%, maybe this goes up to 35%, you start to see price to sales reach the 20s, which is certainly a lot better than the 50 plus that it's at today. All right, same thing on the Cloudflare side. Not a lot to talk about with EPS, so we're just going to skip it. And then we go down to price to sales, and even if they hit this number, so let's say the consensus is 845 for next fiscal year. Forward price to sales is at 42x. We looked at CrowdStrike, and that was starting to dip into the 20s on the same time frame. So with that in mind, I will argue that CrowdStrike is technically cheaper right now, but it's all relative to your definition of cheap, because most value investors wouldn't touch either of these stocks with a 10-foot pole. All right, and speaking of value, just looking at Morningstar, which I would consider to be a fairly conservative estimator of fair value. I really enjoy looking at Morningstar as sort of a level set. Morningstar isn't going to go in and say to the moon on anything. So if you ever need to, level yourself out, go check it at Morningstar. I get free access through my library. You can check with yours. From a fair value perspective, CrowdStrike they have at $200 as of September 1st. So they have it at a 19% premium. They go on these reports to talk about a lot of things, including moat, etc. This is a narrow moat company, which is pretty good for something that just started out. All right, taking a look on the flip side for Cloudflare and Morningstar, they don't have any analysts assigned to this one. That happens sometimes when a company's new, particularly in technology and stuff. Morningstar is going to want to see more of a track record of performance. But we do have a fair value estimated through their quant score, which is not assigned to an analyst. It's more or less just done through automatic processing. They put it at fair value of 99, and that looks like 17% over what they consider fair value for Cloudflare, but not having an analyst on it, it's kind of a little bit of a red flag there depending on how you want to look at it. All right, taking a look at TipRanks to see what the best performing analysts think of these two companies. Bring this out a little bit. We always try to go by freshest info. You can see 23 days ago, gentleman at Goldman Sachs says hold at 305. Prior to that, last month, several updates came in. Those were all buys. But I think at this point, you're going to see a lot of analysts holding out for the next earnings report, which should come out in October or maybe early November. All right, same thing on the Cloudflare side. I have a couple updates over the last 12 days. We have hold, buy at 140, and a blank hold. In most cases, you've got slim to limited upside in the near term. I see 14% as the high. There's some 10%, but there's a couple downsides as well. All right, guys, so that's some research of me just comparing CrowdStrike and Cloudflare. At the end of the day, I think I'm sticking with my CrowdStrike pick. However, the Morningstar fair valuation of $200 is certainly one to keep in mind. So I have to pay attention to that, especially since I think that the market is running on shaky ground. But what I want to be careful is not to buy in at all-time highs. So I'll be looking in and around that $200 price point, and it's going to be interesting because this is a stock that will not have earnings per share, dividend, none of that's going to happen for a while. All right, guys, let me know what you think of the stocks we talked about here, CrowdStrike, Cloudflare, and even Palo Alto. If you're familiar with them, let me know what you think in the comments. Thanks as always for watching. We'll see you on the next video.